Hey everyone, I'm Daniel Snyder from Seeking Alpha, and today we have a true giant that is here to talk to us, give his best idea for 2025. Someone you might know if you've been around Seeking Alpha for a while. We've done plenty of webinars with him over the years, and he's had some massive calls. I mean, this guy really knows his stuff when it comes to M&A, arbitrage. He even guided us back during the SPAC craze. He helps us time and time again, so we appreciate it that he's here. But before we dive in with Chris DeMuth Jr. from Sifting the World, we're going to go ahead and knock out a quick legal disclaimer, so bear with me. Past performance is no guarantee of future results. Any views or opinions expressed in the webinar do not reflect those of Seeking Alpha as a whole. Seeking Alpha does not take account of your objectives or your financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Information provided by the investing group does not constitute investing advice. Investing group leaders are third-party authors that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Any content and tools on the platform are offered for information purposes only. And now with that out of the way, I want to go ahead and ask him to join us, the man, the myth, the legend, Chris DeMuth Jr., Wrangley Capital, Sifting the World. Chris, it's always a pleasure to have you on. How you doing?
Daniel, it's good to be here.
So I don't think there's any better way that we can kick this off than giving you the credit where credit is due, letting you have a victory lap, because you were a part of our election 2024 event. We had you on Seeking Alpha, and I remember our conversation so well. And you had mentioned the playbook for if the Trump administration won, here's where people should be looking. And as of the last time I checked, you called Fannie Mae, you called Freddie Mac. Those are some of your picks. They're up over 350% in just 3 months. Tremendous returns, tremendous pick. Want to know, A, how'd you do it? We all want to know that. But B, you're still with the name. So what's the story here? How long are we playing this part of the playbook out?
Well, I've been thinking about those names this week, for sure. I had thought a lot about this election, the political season, and the likely policy changes in a second Trump administration. I love public policy. I'm a little bit interested in politics. I've kind of gotten out of as much direct involvement as I had when I was much younger, but it's something that I care a lot about. You always should pay attention to what do you like to research when nobody's looking and when you're not getting paid. And I'm kind of peeking at politics a lot. I made quite a few political bets, and especially arbitraging across different platforms. I owned an enormous position in one quirky free roll that didn't come up this week, but it would have been an interesting one. But had a number of bets, literal bets, that were essentially riskless. Sometimes they were riskless to the principal, and then had quirky free roll upsides. I owned a number of things that I thought would have been impacted by the election result, but the biggest and best Trump trade was Freddie and Fannie. Own both, like both, still here. The more cowardly way to play this, less upside, less downside, and I think a bit more clarity, is their prefs. They have an endlessly complex rat's nest of securities. So I won't go through all the differences. The price is kind of, there's some trade-off between liquidity and price, but they're my favorite way to play the selection. I think that they're still very good. What's happened this week is that we've made a lot of progress on Trump's economic team, Treasury in particular. I would say that the appointments are diverse in quality, some terrible, some okay, some great. But I would say that the key roles for Freddie and Fannie err in the great direction. I'm a huge fan of his Treasury pick, but the various people working with him on this area, I think, are going to be good and indicative of seriousness which I equate with ending conservatorship. This status was always supposed to be a temporary one. It was hugely discriminatory against these two companies versus how any other bailed out company was treated during the financial crisis. The taxpayer, I'm not only a shareholder, I'm a taxpayer, so I'm on both sides of this. The taxpayer has been richly paid back many times over for their role in the financial crisis. It was a successful bailout. I'm more of a free market guy. I'm not into government bailouts, but this one worked. There's going to be lots of complexity in exactly how the exit happens. I think it will happen. I think it will be extremely good for the common shareholder. I think the common has the most upside from here, but less clarity. I think the prefs have a lot of clarity and are money good. So I have not sold any. In fact, it was just curious to me to see how under stated the response was the election night itself. I had kind of two thresholds for how impactful the election would be on the country. One was would the popular vote and the electoral college align, and then secondly, would everybody of goodwill, essentially, there's always going to be some crazy people, but would everybody agree with the consequences of the election that night? You know, we could have had weeks and weeks and weeks of tumult that really would have cut into the new administration on either side, and we were 2-0. It was an utterly unambiguous election. It was the least controversial election outcome of this century. It was the most ethnically and racially polarized election of this century. You know, groups that had been highly organized by party, kind of the partisan breakdown kind of deconstructed in a way that I think is just enormously helpful and healthy for the country, to not have it just kind of tribal groups battling each other for power. It was a clear outcome, and for people who had been talking about democracy itself as the topic, democracy kind of was clear and decisive. It wasn't a landslide, but it was clear and decisive in any event. So I think that gives the administration a pretty free hand. They don't need legislation, but it's helpful to have Senate and House control, although by a tiny margin. And certainly the Senate control will be very helpful in getting through the appointment process, which will be helpful for here. So yeah, so I own and like both, with a little more clarity on prefs than common, a little more upside on common than prefs.
Think I'm back.
Did you lose me there for a minute?
That. Yeah, I'm not sure which one of us lost, but looks like we're back. So
okay, well, I was babbling on about Freddie and Fannie, so hopefully that was
that's all right.
Okay, I think the audience can hear me.
They can hear you, so it must have been me. So
okay.
jumping in though, maybe you already mentioned it, maybe I missed it, but just to make sure we clarify, the Freddie and the Fannie play going from, you know, obviously we look at a run up like 350%. Some people might get fearful; they think they're buying the top. I mean, what are we kind of looking at here for, you know, administration? What's the exit play for investors, and what kind of IRR are we still anticipating here?
Oh, I think it could be. I think the common could and probably will be worth a multiple of where they're trading now, leaving the government administration. It's very hard to be overly precise in this because we don't know exactly how dilution is going to work. I mean, these are huge businesses. They're good businesses. We don't know a lot of incredibly important details like capital requirements. So there's no way to be overly precise here. If you need an overly precise outcome, prefs are much easier than common. But I would say that the first thing I had to get right was, will it trade up if Trump gets elected? Yes. The kind of electoral college vote count I was working off of in the middle of last year was 312 for Trump. It ended up landing on that number. I thought there was a lot more upside than downside from that number. But after what felt like a substantively volatile election season. It was actually an extremely low volatility polling season, right? He was kind of like everything the slid kind of into an outcome that was fairly preordained, which makes sense in a sense that having a very volatile character can lead to low volatility polls. You have very few people who have kind of no feelings about Donald Trump, right? A lot of people love him or hate him. Very few people didn't care. And so that was the first bet to make. And the second bet is, will he get the people in place who want to and are capable of exiting? I think the answer is absolutely. I mean, table pounding, 90% likelihood, with a little bit of uh, humility about exactly the terms in terms of capital requirements, especially. But I think it's exceedingly likely this exits, becomes a private company again. And so higher, I feel very, very good about a multiple of the current price. I feel good about any precision is false precision because we just have issues ahead of us that make it hard. But there's a lot of upside left.
Duly noted. There is a question here that I saw come in that I think is just brilliant and needs to be asked right now is how do you anticipate any, interest rate changes affecting these companies?
Um, they don't affect my decision on whether or not I want to own them. They can handle really any interest rate level. They can't necessarily handle any level of interest rate change that they are not well set up for. So interest rate level. I mean, we can have high interest rates or low interest rates, but they are the kind of spread business requires some kind of clarity and stability.
Gotcha. All right. I want to go ahead and move on to one of these next picks that you brought to me. In the biotech world of all places, which I
Mhm.
know a lot of investors hear biotech and a lot of people are risk averse to the sector. But your track record proves for itself. So I'm happy to dive into this one with you today. You brought forth Artbus Biopharma Corporation. The ticker is ABUS. Would you mind just giving us like a brief rundown of like what is this company focused on? What's the thesis here, and what are you anticipating?
Sure. So, like Freddie and Fannie, I'm an investor. It's always funny to me that sell side analysts or journalists kind of get praised for their independence between what the like as if it's a virtue that they would never actually do the thing they're talking about. I pretty much only talk my book in part because it's what I know about. If I know about it and like it, I own it, and if I know about it and like it and own it and I'm set up and sized the way I want to be, I'm happy to talk about it, and I don't have anything else to talk about. So this is a tiny company, 600 or so $1 million uh, market cap. It is one of the companies that's kind of in the interdependent tentacles, kind of the world of Roivant, ROIV. But what's special about Arbutus to me is that they have a big investment in Genevant. So this whole Vant collection of companies under Roivant, it's not that important or interesting, but what's important and interesting to me is that warp speed in 2020, 2021 was the government program to expedite the vaccine for COVID. One of the companies very much involved was Moderna. Incidentally, and the history on this gets a little bit lost, but the one of the companies not involved was Pfizer. Pfizer had Lightspeed, their own separate project. Their approvals and process were expedited by the government, but they actually didn't take government money the way that Moderna did. In any event, they were told, as Mark Zuckerberg says, move fast and break things. They were told to move fast and break things. One of the things they broke was IP and patented technology and IP owned by Genevant. And so critical parts of the vaccine delivery were used by Pfizer and by Moderna with very clear overlap with IP that was owned in the case of Moderna. Slightly less clear, but pretty darn clear in the case of Pfizer too. So I think that they're ultimately going to own royalties at Genevant and Arbutus for these. So they're going to have settle or win in court several percent of Pfizer and Moderna revenues from COVID vaccine. So I think that setting aside their, early stage biotech company projects, the potential litigation value is spectacular. Again, like Freddie and Fannie, I can tell you if they win these cases, higher is the correct direction on the common stock. A multiple of the current market cap, I think, is kind of correct in terms of magnitude. Any precision is impossible because we don't have a settlement, we don't have a win, and once we have a win, we don't know exactly what we won. So false precision would be a little bit ridiculous here, but it's a very small market cap. It's a very small company. It's a very, very huge, we're talking about a $600 million company and billions and billions and billions of dollars of litigation. A couple things about it that I love. One is I love the game theory that whoever deals with this first between Moderna and Pfizer would get a very valuable piece of IP against the other one, so to speak, right? Their legal and market position would be hugely strengthened to not be the second one out on this. So I think that the litigation is very valuable. The other thing I'd say is, while I have less focus on their early stage pipeline, management is coming around. They are not going to use their at the money equity offering facility this year that I've been really unhappy about, that there's signs that they're either aligning with, coinciding with, or listening to their shareholders in a way that is hugely helpful, right? Like I thought that, we could buy it too, and the litigation was worth 8, but then by the time they're done diluting us, it would be a 4 kind of thing, just even very approximately in terms of directionally, we had a lot of what I saw as the opportunity here potentially squandered on dilution. I think that's not going to be the case anymore. And happily, it's not going to involve a big, expensive activist battle with the shareholder base. So I feel like we're being listened to. I feel like the management's fine, the business is fine, and the IP is spectacular.
So just to kind of clarify here, because I was jumping around Seeking Alpha here, notice that the revision grade hasn't been doing too well. Looks like a lot of the sell side analysts are kind of taking down these revenue and EPS projections. But what you're kind of laying out here is more of the legal play, right? Get
Yeah.
rid of all of this murkiness, free it up. I see a report here that they I guess management wants to reduce cash or net cash
Yeah.
burn this year. I was looking at the financials here at the bottom of the symbol page where, it looks like they have a good amount of total cash compared to debt. But they still have some specific IP that you like, which is
Yeah.
kind of what is backing the solid thesis you have in the company. So, okay, just wanted to make sure we clarify that because, biotech can be a little confusing for people at times. But speaking of biotech, I mean, obviously you can't really ignore the FDA when you start talking about that sector in that region. Is there any potential issues with Arbutus and the FDA coming down the pipeline that people should be aware about?
I can ignore the FDA when it comes to this. If they win a multi-billion-dollar judgment against Pfizer and Moderna in the next year, I will be extremely happy owning a company that's currently valued by the market at $600 million, even if they have nothing. In fact, in some of these cases, I separately own litigation funding or have other relationships with the event that I am trying to isolate. In this case, I just own the equity, and I would be more than happy if they would shut down everything whatsoever, conserve cash, and simply have a litigation stub. That's just not available. So yeah, so the conserving the recent efforts to tamp down on expenses and dilution through equity offering is a help, but the FDA can do whatever they want. I would just assume save the money.
Amazing. Let's move on to this next stock that you brought forward. Now, this isn't your big idea for the year. We're going to save that and touch on that here in just a little bit. But Burford,
Sure.
Burford Capital Limited, I guess, is the name of the company, ticker symbol BUR. Obviously, financials are kind of in the limelight as of right now. Everybody's watching them, even in the higher interest rate environment. We're getting the bank earnings and everything else, but this is a specialized finance company. So, what is it that they do? How do they generate money?
So they do litigation funding. I do litigation funding. They do it at a more a bigger scale. It's one of the few kind of publicly traded companies that does this. They're lawyers and they fund suits. Some of the suits there's opportunities to own separately. The one I'd mentioned in this case, I do own both the litigation and the common stock. But they look for opportunities where you can imagine somebody happens to be uh, in a position to have a very valuable lawsuit, but maybe it drove them into bankruptcy, maybe they need liquidity. And this is kind of a service provider that will analyze litigation, pay a discount, manage the process, and sometimes many years later get whatever outcome. They're staggeringly successful at this. They're good at judging these cases. They have some wins, they have some losses, but they have one case that's by far the kind of biggest and most interesting to me. So I'd say the rest of the business is fine. Like when we talked about Arbutus, I said, other than litigation, I would just shut it down. Other than litigation in Burford, I think it's a great business that I might not have otherwise had a reason to own it. But I kind of like the other things they do. What I love is the Peterson claims. What I love, and I directly own also claims there. So this was against a sovereign, Argentina. And Argentina has for centuries been kind of socialistic and arbitrary, and in this case, really violated clear contractual language. And the specific malefactor was a YPF, YPF, also ticker YPF, also a long position of mine, is their oil and gas company. And so they stole my words, nationalized in ways that were inconsistent with their contractual obligations to pay for what they stole. So stoles are probably a fair shorthand. Value that wound its way through courts. They're liable, and now it's just a matter of collecting. Now, who are we collecting from? Historically, we would be collecting from one of the most kind of iffy debtors you could imagine. Argentina for centuries has always been on the cusp of, is it third world, is it first world? You know, they've probably incinerated more creditor money than, I'm not sure about this, but than any other country. I mean, I think they've been in or on the verge of defaulting kind of a third of their time historically, or a bond of a certain segment, a third of the time was going to default sooner or later. So they've been not only terrible in the way that there's a lot of countries to be terrible, you know, not, but some of them are kind of obviously terrible. You don't want to loan a lot of money to Zimbabwe or Venezuela or North Korea. But if you squint at Argentina, you look at it and you think maybe it's Switzerland. It's not Switzerland. It's kind of somewhere in the middle. But they have a sensational president, my favorite world leader right now, who has been in a whirlwind of a first year, maybe the most successful first year of any presidency of any country of my lifetime in the last, half century. And he's just done wonders for this country. So my Texas hedge, long YPF, so I'm long the complicating my life and complicating things. The company that is the bad guys here, in part because he might just fully privatize it, in part to help pay us off. It's well over $10 billion. It's a lot of money for this country. But President Milei, he's talked about raising bonds and naming it after his socialist predecessor, which I thought was hilarious, because he's like, look, he's just solving the problem. He's just an honest person and he pays his debts. there's no reason why he should get responsibility for this. And so just clarify that he's fixing the problem, not causing the problem. He's mused that he might name the bond to raise the money to pay us back after the predecessor that got into this mess, which I just thought that was wonderful. But the economy has been booming. The inflation has been getting crushed. Their credit is doing very well. Maybe I'm just going to be one more gringo to get roped into Argentine finances, but I believe it this time. This time is different. The spread over U.S. borrowing rates has been coming down and down and down, and he's just this sensational leader. I mean, he's done everything he said he would do, day after day. I look for people like this to disappoint me, and he just fails to disappoint every day. And the only thing he could do to improve his incredible reputation in my mind would be to pay me back my money. And I think he's going to do what he can on that front this year, which I think is going to be spectacular for the claims themselves and spectacular for Burford, which, if they win this, even if we settle, I don't want to negotiate against myself here, but we could even, it's all just discounted cash flow. Faster we settling immediately with certainty, one could have some kind of discount and have everybody win. Fully privatize YPF and have everybody win. Now, he does not have a legislative control. He might pick that up in the future, but he's transforming his country. I'm looking at real estate down there. I just think it's an incredible, it was my favorite country market last year. I think it's an incredible place. I think it's an incredible leader, and pay me back my money and you'll live in my heart forever.
Yeah, amazing. I was just trying to look up. I remember the other week looking at some of the Argentina ETFs. We're seeing a lot of capital inflow. I was trying to find it here quickly on Seeking Alpha, but I know.
Yeah, there's some problems with some of the ETFs in terms of exactly which country. I don't love them. I kind of prefer to do it by hand. YPF itself has always been my favorite way to play Argentina directly, but I kind of like oil and gas exposure. I kind of like Argentina. That was an easy one for me, and I just think that we can get to a win-win here with the litigation and some kind of good settlement here.
Yeah, well, we hope that comes true. Obviously, for your sake, in regards to Buford Capital. Moving on here, because I do want to leave time at the end as well for Q&A. We need to talk about mergers and acquisitions, which is
Sure.
something you obviously follow a ton within Sifting the World. You provide updates every single week about all the M&A that you're watching, but one specifically that is hot in the financial markets, specifically because of regulation of banks, and maybe that gives it away a little bit, but Capital One and Discover Financial, you're a believer or not a believer in this deal? What are you anticipating?
Believer, own it, have for some time now. And this was kind of one in the Biden administration that I thought we're going to have a completely different set of regulators. So tax policy, spending policy can be really slow to move. Taxes require legislation. It might be all that Trump can do to get old tax cuts renewed versus kind of fundamental policy direction change is really difficult with a small legislative majority when it requires legislation. Spending is really tricky because of the amount of federal government spending that is very hard for the president to control. We have a ton of middle-class transfer payments. The problem is that's hard for him to budget changes. The bigger problem is they're popular, and interest payments. And so once you get past that, you deal with fairly small potatoes. Regulatory change you can do, bam, day one. You have people who are terrible for M&A, terrible for companies, capitalism, America, who are on their way out, who really are anti-deal, but beyond that have personal animus, and they weaponize the process to hurt their political enemies at the DOJ, at the FTC, at the FCC, at the banking regulators. And so Lena Khan, I think, was kind of representative of this, but there were others. They're gone, and they're being replaced with people who are terrific. We have a terrific new inbound SEC chairman who is smart, who is fair, the kind of person who, if I was innocent, I would love to have him be involved. If I was guilty, I'd hate to have him be involved because he's going to, be the kind of guy to go after actual malefactors versus just make life miserable for everybody, which is what the Biden administration has done for 4 years. So in 2025, we not only have a deal environment where we could have a good deal process, we have 4 years of a backlog of people who had legal, logical things to do that they weren't able to do. So I think we're going to have a boom in M&A, especially in the regulated markets where the Fed, the FDIC, the OCC, all these kind of, even some of the smaller, kind of less famous regulators are going to be more transparent, fairer, more pro-market, more pro-capitalism, more pro-deal. And so I think we're going to just have, well more than twice as many deals as last year. So just taking off some of the specific ones. Some of the spreads and prices have changed a bit since I set them up, but Capital One is buying Discover Financial. Discover Financial is mismanaged. Capital One has a terrific management team. I'm a great admirer of their CEO. The regulators should not block this. They should require this deal. I mean, literally, if they had let Discover to collapse at some point, Capital One would have been the logical savior that the government would have forced them into. So it still requires various approvals. They need OCC and Fed approval. The regulators should require this. They're going to get this deal done, I think, relatively quickly, assuming we can get it done by May, which I think is likely. It's still double-digit return. It's not a meaty return anymore, but call it 13% return just on the ARB spread, which is between $6 and $7. But beyond that, I think it's a great business, great combination. And so, stock deals, you have the upside from the deal itself. So I own Discover. I like Discover. It's one of the basket of America unshackled, America's revival, America kind of not dealing with these really, truly bad actors. I mean, Biden didn't care about regulatory affairs, so he kind of outsourced personnel to Liz Warren, who kind of would put out a press release almost every deal saying, I hate this deal, you should block this deal, just mindlessly opposed to them. So I think that, a world without Lena Khan is a world where there is much more activity and much more ability for companies to markets to clear and companies to do what made sense. The Biden administration tried to archive specific business models and require companies to continue them that in many cases went bankrupt or were destroyed because they weren't able to move at the pace of markets. I mean, not just do deals have to be approved, but there has to be some tempo so that by the time you close a deal, it's still relevant to why you announced it, which has kind of become impossible over the last few years. So Discover, own DFS, Capital One. Another, just to tick off another one, I own Juniper, which is getting bought by Hewlett Packard, still like 17% approval return or so if it's done by April, which I expect it will be. That's just another one that had a nonsense antitrust delay under the Biden administration. It should get approved. It probably will get approved. I think that that's a good opportunity. So some of the deals I look at are tiny, 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 especially bank deals. But in terms of companies that other people other than me would have heard of, know about, care about, those are two that I draw people's attention to that I think are interesting, lucrative situations.
Yeah, thank you for sharing that. So to summarize, you said that the regulators should, without a doubt, let the Capital One Discover Financial Service deal go through. And the play here is to own Discover Financial because it's Capital One that's offering a little over a share, I believe it is, for each of Discover. So that you said is still about remind me if I quote this wrong, 13%?
Sure. So the current just on the ARB spread, and it's tightened a lot from where I bought it, but it was 13% or so. IRR, assuming that we get a deal closing around May. And so for the definitive deal is, it's slightly, I don't recall from the background exactly how they got to this number. It was probably originally one for one, and then it was tweaked. It is, for precision's sake, a 1.0192 Capital One shares for Discover, but you can think about it as one for one stock deal, slightly better than that. Yeah, big upgrade in management, big upgrade in business plan. I think this is gonna be a great deal for Capital One. I've known and followed and admired the Rich Fairbank, their CEO, his whole career. And he's been a step or two ahead of his industry the entire time. So he's just a great man, good person, admirable, ethical, somebody that regulators should love. Having a huge amount of credibility is important, especially when you're buying a company that's like doesn't have a huge amount of credibility. So this is great for Discover shareholders. This is great for the for the stability of our system, and I think it'll be great for Capital One.
Amazing. Real quick, somebody asked, what was the second deal that you had mentioned? If we can just get repeated that, and then I want to ask you about another thing. Get into that big name.
I tend to kind of babble through these, but just thinking about, and this is really thinking about a basket of M&A opportunities leaving the kind of anti deal, et cetera, Biden administration, is a Juniper Network getting bought by Hewlett Packard. That spread IRR about 17%, assuming a close by April, and that's a cash deal, so a little simpler. You get $40 a share, and so this was one that had the reason why I was in it is there was kind of a spook to the spread. It was trading as if it was going to close over $38. It kind of collapsed to 35 or so, and has been kind of eking its way back up. But yeah, pretty simple. Buy it for under $39, make a buck, close in the next few months. Think that's money good.
Amazing. Thanks for that. So we wanted to talk real quick on a topic that you're kind of circling in the water around. We won't talk about specific names right now, but I know we will have a webinar here in the coming months where we will dive deeper into this. But you're saying that this year might be the year to really explore activism.
Yeah.
Can you explain?
Sure. So the last few years have had some semi-legitimate reasons for entrenched managements to want to wait. We had aggressive, opaque regulators blocking deals. We had tumult in the credit markets for the kind of bridge financing necessary to get deals done. We now have better, clearer regulators. We have a pretty stable credit market. I think that the private equity is able to do LBOs. We have a strong enough equity market in a way that shouldn't matter, but I find there's a big bid-ask discordant problem with boards that really get stuck on not getting paid a premium to their best recent share price. Shouldn't matter at all. Like if prices were all cut in half, right, you should always do what makes sense. But I find a lot of target boards are just bugged by if the markets are weak enough. So strong equity markets, strong credit markets, better regulators. There's no excuse left. If somebody's business model hasn't worked for a few years, it's time to do something else. It's time to sell. It's time to liquidate. It's not time to keep trying something that hasn't worked for a while. So I think that there's going to be a very active role for shareholders. I think that I don't love the phrase activism. I think it should be the default assumption that if you own the place, you're allowed to act like you own the place. I think that I wouldn't say that you're activist about your car or your house. You move the furniture around the way you think you should be, even if the housekeeper doesn't like it, right? Like even if you have these agents and they get paid a salary, and I hope that they have good jobs and are listened to, but they are agents. They're not the principals. If they can take it private and own it and do whatever the heck they want with it, but a public company should defer to shareholders. So I think that you have a couple categories that are ones that were in particular need of kind of a specialized activism, and then you're going to have a couple others, but there's going to be a lot of shareholder, what people call shareholder activism this year. Two that I would mention that I think are really, really interesting. And I wasn't going to mention these in particular, but I think I will. One is Boaz Weinstein, who's been an activist in the closed-end fund area in the US, and then he's doing similar in the UK right now. But you have these big, incredibly entrenched managers. They don't tend to outperform. They tend to have high fees. They tend to be very averse to the interest of minority, largely retail holders. And Boaz has just been cleaning up this whole industry. I mean, he's making a lot of money for himself and his investors. He's also making a lot of money for all the people who aren't involved. It is the least controversial, most wholesome thing you could imagine doing. These entities are all nominally profit-seeking entities, right? We're not talking about a charity. We're not talking about an art gallery. We're talking about people who are supposed to be out there trying to make money. And so it's funny when you see the kind of scandalized vapors that they get trying to accuse him of something. What they're trying to accuse him of is they're embarrassed that people look at their underperformance and their overcharging and their crappiness, and he's demanding that they fix it. So it's clear why the people who he's pointing at don't like it. It's a little funny in the UK because there's a little bit of kind of xenophobia involved in, this American, is telling us what to do. But of course, it's great for the UK pensioners and investors in all these funds, right? He's doing this in a way that enriches them just along with him. I mean, it's the most completely symmetrical thing. And so I think that he's really cleaning up a whole industry in need of this. And so I think that is a really interesting one. And then the other one I'd mention.
Opportunity, Chris, I'm gonna go ahead and I'm gonna stop us right there because I want to continue to make sure we get all.
Sure.
You move on to the number one pick. We're flying through time here. I could talk to you all day. And like I said, we will have another webinar
On activism. Okay,
about
great.
activism.
I have some other
I
thoughts
just
on
wanted to
activism.
kind of get some of your thoughts there.
Sure.
So the big idea for this year, which I love doing with you every year. We've done it for the last 2 or 3 years now. Love these picks. Love the returns that I see. I'm gonna let you introduce this one. It's completely out of left field to me. It's almost like the new world commodity. I don't even know if you call it that, but tell people what it is and kind of explain what's happening behind it.
Sure, I'll tell people what it is. Let me. My friend Jeremy Raper, who has a wonderful research service, has mocked the whole best idea of the year, and I took it a little personally because I normally put these out, but I would say there's an arbitrariness to it, right? Like nothing I do has any connection to astronomy or our calendar or the next 12 months versus 18 months or 6 months. Who knows? But give the people what they want. I try to come up with some idea, and it's useful. I write every day, every week, every month, and I like kind of being constrained by deadlines a little bit just to say what's on my mind. So it is not a scientific, but I try each year. This year, Cadiz is a water company. The ticker is CDZI. And the thesis is that California needs water. California has had what I would describe historically as a regulatory problem, what people who are closer to it say is really more of a litigation problem. So it's not necessarily regulators blocking these projects, but NGOs, other litigants fighting along the way to delay projects. And this goes across multiple industries, right? You have just decrepit old infrastructure in energy and other areas in California because they prevent new projects. Now, when you prevent a new project in a state like California with a huge population and a modern economy, it's not to say these aren't people who turn the lights off. These are people who rely on ancient, decrepit, much dirtier infrastructure than the market would ever offer. But it is the most beautiful state in the country, the worst policy environment in the country, one of the worst litigation environments in the country, and all these things have consequences. We're seeing some of the consequences in LA right now with hydrants that don't have water. These are all solvable problems, right? Like wealthy first world capitalism, there's no reason to be in this situation. It was a choice. It was a policy choice to be in this situation. And at some point, there's going to be a critical mass of people who will choose to not repeat it. And I think it could be this year. So this is so looking at, is there a problem in the Southwest US? Yes. What is the problem? It is not supply, it is infrastructure. We have not, other than on fairly specialized tiny scales, we haven't created or destroyed water in billions of years. What we have done is climatological change has lessened snow melt, so that liquid water has become more important. The entire infrastructure is built around kind of where snow melt is. Cadiz has under ground water, and just a huge amount of it, and facilities that can get it to everywhere it's needed in the Southwest US. So it has water in the form that is most prevalent right now. It needs to build out the infrastructure, but it's going to offer pipelines, it's going to offer treatment, kind of the whole panoply of what's needed. And I think that this is the year that the regulatory / litigation impasse is broken. Management's fantastic. It's extremely savvy and sophisticated in terms of dealing with NGO groups, in terms of dealing with the government, and in terms of dealing with the areas that most need water, that have to rely, but also have access to government subsidized funding. So a lot of this is going to be, and a lot of my interest in this is the fact that the customers are going to be in areas where a lot of the funding is going to be highly subsidized, highly attractive funding from people who are going to take a lot of the water that we have access to, help with financing, help with all parts of it. And then there's a flywheel effect that, we'll have the pipes, we'll have the water, we'll have the treatment and so forth in contracts that I think the way to think about it is this. While I think 2025 is the year for Cadiz, I think that a couple years from now, it is going to be a very, very boring investment where you're just sitting here collecting cash flow from customers with AAA ratings on 50-year contracts and getting some rate of return, but the equity will be a multiple of where it is now. If it's 5-ish now, it'll be, $15 or $20 a share, kind of getting a kind of boring yield for grandparents. There actually is a pref now, if you want a boring yield for grandparents now, CDZIP, which I would own, other than the fact that I own so much of the common. I'm greedy here. I want all the upside of the common. So I don't have a reason to personally or professionally own their pref. But I think if that was a payoff structure you're more interested in, it's worth, without saying too much more about it, it's worth looking at and thinking about the pref, looking at and thinking about options, which are available here too. But I think it's a terrific company. It's a terrific management team. It's a terrific business plan, and has been laying the groundwork for this day for years. And that's the relationships with everybody who matter in California. We know who to sell it to. We know who to sell it to, and we know where it's needed. In fact, the philanthropy helping out in LA with water has been trucking water to this area, with trucks driving parallel with pipes that we would happily have piped it to, but with 1,000 times the scale. So trying to solve a problem in the middle of a problem in a desperate situation involves practicality, but the practical solutions that are available now are at 1,000th the scale of what we would do as our business, happily ready, willing, and available if the people want it. But we got water, and I believe it is needed and wanted in a high population density area that has infrastructure that relies on snowmelt that doesn't exist anymore, where we have kind of underground water that does. And so this is, I think, a huge opportunity in terms of supply and demand. It's supply, I think it's going to be demanded, and I think that impasse that's been there for years will break this year.
Yeah, thank you for laying that out for us. I mean, CDZI, as we've been talking, to green on the day here with us. But interesting, you're talking about long-term contracts.
Yeah.
Personally, I mean, I used to live in Los Angeles. I know a lot of people out there, they desperately want this water as well. So interesting kind of setup here. Chris, thanks for sharing. I want to go ahead and actually dive into some of the people that are joining us today for some Q&A here as we're coming up to the top of the hour. So if you don't mind, we're going to kind of run back and go through everything from what we've talked about here at the beginning of the webinar all the way up to right now. So there was a question about, you mentioned HP. Sorry, so I'm gonna jump around a little bit. HP, they didn't catch who the M&A party was. That's Juniper Networks.
Juniper Networks, JNPR. And actually, to clarify, the ticker of the buyer, HPE. So this is Hewlett Packard buying Juniper Networks. The last dollar to make, $40 cash deal. Trading last I looked, I'm not watching while we're talking, but call it $39. It had kind of gone down to 35, and it's on the basket of opportunities that I think is going to be relevant in a new era for M&A.
Amazing. We had a question about the exit for Fannie and Freddie. So the exit there would be just when they go private, right?
Yes.
All right. Just want to make sure we clarify that. And you're still holding those positions.
Yep.
And okay, so question about ABUS.
I'm kind of kicking myself in that I didn't sell any, but the day after the election, I kind of assumed the market was just going to price it in efficiently. It kind of didn't. It kind of was delayed reaction. I don't know why. It is, much of the things that I do are either successful or unsuccessful, a little bit one-off, and so it doesn't have a rich backlog of comparable situations for me to rely to in terms of how the market should respond. I just generally, a lot of the questions that I get that I don't know how to answer is, why did the market do such? I don't know. I know that it's two fabulously valuable businesses worth a multiple of what they cost today, with a high level of confidence and a near certainty that after conservatorship, they're going to be worth more than today. They do not need to, shouldn't pay back government prefs. They've paid back the taxpayer many times over. The taxpayer's gotten a fine deal. The shareholders will get the rest from here.
Awesome. ABUS.
Yes.
The litigation we were talking about, there was a question of, do you think they can afford the litigation?
They can. And I can say that sort of authoritatively, and that I'm there are people happy to fund litigation and who do such things. So yeah, no,
through companies like Burford Capital, right? Because you said they're funding.
Yeah.
All right, there we go. We have somebody here from Argentina, actually.
Cool.
So they said a perfect moment to invest in my country. Love to see it. Thanks for joining us.
I love mountains and steak and libertarianism. So I look at the mountains, and so I'm literally looking at real estate down there. I'm looking at a ranch. I just need to hope that in the lifetime of my ownership that they have presidents that are 1/10 as good as the current one, or this guy kind of locks it in a little bit. But I am just I am fanboying Argentina these days.
Gotcha. And that's what some of these other questions were about, is like the story behind this is that they actually end up paying what is owed.
Yeah.
Therefore,
and not to negotiate against myself, but paying 50 cents on the dollar would be a triumph, right? So a reasonable settlement that's good for everybody, that's good for Argentina, that's good for YPF, which I also own. So I'm going to call it Texas hedge. I'm on both sides of it. The funny history of that cliche is when oil men first saw the financial contracts where they could lay off risk from their physical activities, but they just tended to be oil bulls, or they wouldn't be wildcatters. They would end up buying the volatility to double down on what they owned physically instead of hedging. And so this was a Texas hedge of mine buying both sides of this litigation.
There's a question here. Maybe you know some names that come to mind, but do you have any thoughts about M&A within the U.S. department store space or luxury spaces? Is there anything you
No. I think no is probably should be the full answer. I'm baffled by retail. I'm baffled. I do buy shopping basically on Amazon delivered to my house. I don't think about retail that much. I definitely don't think about luxury that much. I think one of the successes, you could say, of the Biden era antitrust blocking kind of mid-tier purse deals was one of the most absurd failures of prosecutorial discretion in the history of the universe. They won. I think. I hope it makes them happy. It's just was utterly preposterous. But and yet one more Target that was basically told your business model is sacred and cannot be changed. And you're a second-class citizen, unlike anybody else who's allowed to leave this business, fix that business. You have to keep doing what you're doing because we said so. So that was the Tapestry Capri deal block was absurd. I have no view on what's going to come next. I should just say I don't know.
Thanks for clarifying. There was another question that came in. Just want to make sure we clarify again. The Capital One Discover deal.
Mhm.
The play here would to be to buy
By Discover.
Discover stock.
Yeah.
Right. And let Capital One acquire and close that deal.
Yeah, and the spread between the two is $6 to $7 a share. I think that spread collapses. That spread collapses by, call it May, and it's a double-digit IRR, and then it's a good deal. So it probably trades up, not down.
All right. Usually I wouldn't do this, but I'm gonna take this one because it's another winner. He asked about two of them. James is here asking about Vate got the FDA approval, doubled their price. He's kind of wondering like how you feel about it after the FDA approval. I mean, just another one.
Sure. So it is trading about $10 a share. It is a highly leveraged equity. So zero, it has always been my thesis that zero is a real possibility. After the FDA approval, I think it's a little harder for me to get to zero. They still owe an enormous amount of money in February 2026. They have to sell assets between now and then. They own Spectrum that I think is going to be auctioned this year. I think they're another beneficiary of the new administration that's going to do a FCC Spectrum auction. I think they can get a lot of the way they need to selling Spectrum. They probably need to sell some other things. The business MetaBeacon that just got an approval with a clean label is by far and away my favorite part. If I ran this company, I would rename Innovate MetaBeacon, and I would focus completely on TGFR. It's a great product, a great clean label. It's probably more valuable than when they first started this. Nephrology has more and more facilities. It's going to become ubiquitous. It is absolutely a kind of razor blade model of once you sell these devices, there's going to be kind of ongoing. There's going to be ongoing business in the die for monitoring of this. If you look at the valuation, kind of pre-money, early on valuation, I mean, the market cap's still like, less than $150 million. They only own 40% of this of this sub, but I can come up with no way that it'd be worth less than $500 million as an overall company. It's probably worth. Well, I think it's worth at least $1 billion. So this one subsidiary should be $400 million. It's a messy hodgepodge of assets. A lot of the other businesses that I kind of had expected to kind of keep the lights on while we waited for this have been doing less well than I would have thought. So buyer beware, do your own work, think for yourself, could be a zero, although now less likely. I wanted to see, could they get some shots on goal, and one shot just went in.
I feel like I've heard you say that before. Anytime it could be a zero, yet time and time again, I've seen the success come down the pipe. So, Chris, unfortunately, we got to wrap it up here. Everyone watching, if you haven't already, check out Sifting the World. It is the investing group service here on Seeking Alpha that Chris is the leader of. There's a lot more questions about preferreds and more about Fannie and Freddie and Argentina and all sorts of these questions that are piling in. So if you have questions after even watching the replay here, reach out to Chris. You can do it within Sifting the World and message him there, or also go to his author profile on Seeking Alpha. I believe there is a message button. You can reach out to Chris, ask your questions, but I highly recommend you go check out Sifting the World. Just go read the reviews. People say the service pays for itself, and I've seen it happen time and time again. Chris, your time is very valuable. We appreciate every time you come to speak with us and share your brilliant ideas. So thank you so much for today.
Thanks, man. That was fun.
Of course. Everyone, we'll see you in the next webinar. Have a great rest of the week. Be safe out there.